Oregon-founded coffee chain Dutch Bros is officially moving to Arizona. It comes a year after 40% of the corporate staff was already moved.
Dutch Brothers, the coffee brand valued between $10 and $12 billion, officially relocated its corporate headquarters from Grants Pass, Oregon to Tempe, Arizona in June 2025. The move marked a significant shift for one of the state's most valuable companies and sparked discussion about the broader economic impact on the region. The Dutch Bros story began on February the 12th, 1992, when two brothers, Dane and Travis Boersma, combined $12,050 to purchase an espresso machine and open a small 200-square-foot pushcart in Grants Pass, Oregon.
Official. More than a year after announcing its plan to move a huge chunk of its team to Arizona, Dutch Bros is saying goodbye to the city where it was founded.
They came from a third-generation dairy farming family whose agricultural business had faced increasing challenges due to changing industry regulations. Although they had far more experience with farming than coffee, they decided to enter the specialty beverage market with a simple espresso setup. By 1994, the company opened its first drive-thru location and awarded its first franchise. Growth followed steadily, reflecting a classic entrepreneurial expansion story built on customer connection and strong brand culture.
A spokesperson confirming the headquarters will move to Phoenix, Arizona. The company says the move will allow more functional and cultural advantages, having all their corporate staff in one location.
In 2009, co-founder Dane Boersma passed away following a serious health condition. At that time, the company operated 135 coffee stands across 7 states. Travis Boersma continued leading the business and appeared on the television program Undercover Boss in 2013, offering viewers a closer look at the company's operations and culture. In 2017, Dutch Bros stopped offering new franchise opportunities and shifted its focus toward company-owned locations to maintain operational consistency.
With some structural changes. In a statement, the company says, quote, "Grants Pass is where our journey began, and it remains a vital part of our story. Our original roasting facility and supporting functions will remain rooted in Grants Pass. The company says its foundation will also continue to uplift Southern Oregon."
The following year, private equity firm TSG Consumer Partners made a strategic investment to support further expansion. On September 15, 2021, Dutch Bros became a publicly traded company on the New York Stock Exchange under the ticker symbol BROS. Shares were priced at $23 and opened at $32.50. Reflecting strong investor interest, the initial public offering raised approximately $556.8 million and valued the company at more than $5 billion. Travis Boersma became one of Oregon's newest billionaires as Dutch Bros continued its rapid expansion. What began as a $12,050 pushcart had evolved into a multi-billion-dollar public company. On January 17, 2024, Dutch Bros announced plans to relocate approximately 40% of its support staff to Arizona by January 1, 2025. The decision marked a major strategic shift and would significantly reshape the company's geographic presence. In July 2024, the company signed a 10-year lease for 136,426 square feet at Liberty Center at Rio Salado in Tempe. It was reported as the largest office lease in the Phoenix metro area that year. The space, previously occupied by another major corporation, was redesigned to include collaborative work areas, employee amenities, multiple coffee bars, training facilities, and recreational spaces. The total investment associated with the relocation reached approximately $41 million. By September 2024, Dutch Bros donated its former Grants Pass headquarters building to the Oregon Center for Creative Learning, signaling a clear transition in its long-term operational plans. On June 11, 2025, the Portland Business Journal reported that the relocation process had been completed. Dutch Bros later confirmed that the Phoenix office would serve as the company's official headquarters moving forward. In earlier public remarks, CEO Christine Barone explained that the company's long-term objective is to expand to more than 4,000 shops nationwide. Leadership noted that Arizona offers access to a broader talent pool to support that growth strategy. Additionally, Phoenix Sky Harbor International Airport, One of the busiest airports in the United States, provides convenient connectivity to the company's expanding markets across the country. Chief People Officer Jess Elmquist spoke candidly about the reasoning behind the relocation. She emphasized that access to a larger talent pool and the overall size of the Tempe to Phoenix metropolitan area were major factors in the decision. Leadership noted that the region offers a wider range of housing options and more predictable commuting times for employees. According to public reporting by the Oregonian, some employees indicated that recruiting young professionals to Grants Pass had presented ongoing challenges due to its smaller size and rural setting. Company representatives consistently framed the move as a long-term growth decision rather than a short-term adjustment. At the time of the announcement, Dutch Bros already operated 85 locations in Arizona, making it one of the company's strongest regional markets. Travis Boersma stated that Grants Pass would always remain an important part of the company's identity. He noted that the roasting facility, select offices, retail locations, and charitable initiatives would continue operating there. Company leadership reiterated that the relocation was driven by strategic expansion goals, workforce considerations, and improved national connectivity through a major airport hub. Oregon Governor Tina Kotek responded through a spokesperson, stating that while it is disappointing when a homegrown company relocates its headquarters, the state remains proud of Dutch Bros' growth and achievements. The statement was brief and measured, emphasizing recognition of the company's success. A representative from Business Oregon acknowledged that the company's expansion focus is increasingly directed towards southern and eastern markets. The spokesperson noted that each company evaluates growth based on its unique strategy and circumstances. Recent business climate rankings provide additional context. CNBC's annual Top States for Business report ranked Oregon 21st in 2023 and 39th in 2025. During the same period, Arizona held the 12th position. According to the Tax Foundation's Business Tax Climate Index, Oregon ranks near the bottom among U.S. states for corporate tax competitiveness, while Arizona maintains comparatively more moderate rates. Oregon's corporate income tax ranges from 6.6% to 7.6%, along with a 0.57% corporate activity tax on gross revenues above $1 million. Oregon is one of only 2 states that applies both a corporate income tax and a gross receipt-style corporate activity tax. By comparison, Arizona uses a flat 4.9% corporate income tax rate and does not apply a separate gross receipts tax. Personal income tax rates also differ significantly. Oregon's top marginal rate reaches 9.9%, with additional local taxes in certain metro areas. Arizona operates under a flat 2.5% personal income tax rate. For higher earning professionals, that difference can materially affect overall take-home income when relocating between the 2 states. A January 2025 study from the University of Oregon reported that 68% of Oregon businesses contacted by out-of-state recruiters eventually expanded operations or moved some portion of their business elsewhere. The study also noted that Oregon's effective business tax burden increased by approximately 33% between 2019 and 2023. While its overall tax competitiveness ranking declined during that period, Dutch Bros is not the only company to adjust its footprint. In recent years, several large employers have restructured, relocated headquarters functions, or reduced operations within Oregon as part of broader national strategies. These changes reflect evolving business priorities, workforce considerations, and geographic expansion trends. Dutch Bros did not publicly disclose exact employee figures tied to the relocation, but the company indicated that approximately 40% of its support staff would transition to Arizona. Estimates suggest that this may have involved several dozen to around 100 positions shifting out of Grants Pass. Employees were given options that included relocation assistance or separation packages. Public reporting included comments from individuals who described the transition as emotional, particularly given the company's strong internal culture and emphasis on community. As headquarters function shift, states can experience changes in their tax base and high-income employment concentration. At the same time, companies often evaluate long-term positioning based on expansion goals, talent access, infrastructure, and overall cost structure. Public filings show that total executive compensation for Dutch Brouwers's senior leadership exceeded $1.3 million in 2024. When corporate headquarters relocate, states may see shifts in high-income tax contributions tied to executive and support staff positions. Terry Hopkins, CEO of the Grants Pass and Josephine County Chamber of Commerce, acknowledged publicly that the community would likely feel the economic effects of the move. No specific tax incentive packages or financial subsidies were publicly announced in connection with the relocation. Tempe Mayor Corey Woods confirmed meeting with company leadership during the transition process. Company representatives consistently stated that the primary drivers behind the decision were access to a larger talent pool, improved national connectivity through a major airport hub, and proximity to high-growth markets such as Texas and the southeastern United States. As of January 2026, Dutch Brouwers operates from its completed Tempe headquarters. The company has not indicated plans to reverse the relocation. Growth remains central to its strategy. Dutch Brouwers announced plans for approximately 175 new store openings in 2026, representing an increase over the prior year. Leadership has outlined long-term expansion goals reaching several thousand locations nationwide. In January 2026, the company acquired Clutch Coffee Bar, a regional brand with approximately 20 locations in the Carolinas. This marked Dutch Brouwers' first acquisition as it continues expanding into new markets. Oregon continues to play a role in the company's operations. The original roasting facility remains in Grants Pass, along with more than 150 retail locations statewide. The Dutch Brouwers Foundation also continues its philanthropic initiatives in Southern Oregon. Travis Boersma remains connected to the Grants Pass community while serving in a leadership capacity. However, long-term strategic planning is now based in Tempe. Company representatives have consistently framed the relocation as part of a broader growth strategy centered on workforce access, infrastructure, and geographic positioning. Business analysts note that companies evaluating expansion at a national scale often consider multiple factors including taxation, regulatory structure, labor markets, and long-term operating efficiency. The data reflects measurable differences between state tax systems and business climate rankings, which may influence corporate location decisions. Ultimately, Dutch Brouwers' move illustrates how large-scale expansion strategies can reshape a company's geographic footprint over time. Recent corporate relocation trends show measurable shifts in where companies choose to base their headquarters operations. Analysts often cite factors such as operating costs, infrastructure access, workforce availability, and regional growth potential when evaluating these moves. Arizona's Phoenix metropolitan area offers a large and expanding labor market, extensive transportation connectivity, and proximity to fast-growing regions across the southern United States. These structural advantages are frequently referenced in business location decisions. In response to Dutch Brouwers' relocation, Oregon Governor Tina Kotek's office issued a brief public statement acknowledging the company's departure while expressing appreciation for its success within the state. No additional policy changes or new business retention initiatives were announced at that time. The relocation reflects a broader economic dynamic in which companies periodically reassess their geographic positioning based on long-term strategy, market access, and operational priorities.